Professor Oz, because Dr. Oz was taken. Follow him on Twitter. We're going to be talking about the SVB fallout, failure of the bank on Silicon Valley. What is the impact on the economy, VR, AR, and Chat GPT, and whatever else Professor Oz wants to talk about. But before we get started, Professor Oz, you're Associate Professor of Finance at Temple University, Fox School of Business. Good friend Howard Bernheim recommended you on the show. He works with us. He's a CFA, CFP, CPA, all these good things. He speaks very highly of you. So if Howard likes you, I like you. But for those who are not familiar with your background, give us a 60-second bio.
Sure. Again, my name is Dr. Bora Ozkan. I am an Associate Professor of Finance. I am also the Academic Director of the online MBA program here at Fox School of Business at Temple University. This is my 8th year at Temple University. We have been teaching. I've been teaching at various levels of finance courses, from undergraduates to specialized masters to MBA programs. I guess one of the most innovative we have is I have a class that is titled FinTech, Blockchain, and Digital Disruption, which is we talk about all these digital disruption innovations, but the most innovative part is we teach this course in virtual reality along with Zoom. So the idea is to increase engagement, and I think this is the 3rd year, 4th round we taught this course. I think it's a great success. It's a very interesting to see where the future of education, online education, is heading. We can talk about meta and virtual reality, of course, as we talk more.
Yeah, so we'll talk about meta, virtual reality. One of your areas of expertise is fintech. Can you talk about digital disruption? And every few years, we see new technology that has implications to massively disrupt the financial industry. In your opinion, what's the biggest disruptor to the financial sector right now?
Well, it's definitely artificial intelligence, specifically generative AI. What we mean by generative AI is that the AI technology that generate entirely new content, from lines of codes to images to human-like speech. You all heard about ChatGPT. This is the company behind it, OpenAI, the partnership with Microsoft, and Google's response to it. So artificial intelligence is not obviously a new concept. The roots of AI goes back to 1956 Dartmouth College workshop on thinking machine. And today, broad range of industries use AI. It's not just financial services, but from healthcare to supply chain to financial services, definitely part of it. And if you look at more recently, 2017-18, with the hype of Bitcoin, the most talked about buzzword was probably blockchain. It's just like there's almost like a correlation with the buzzword blockchain and the price of Bitcoin. As it fluctuates, somehow the last couple of years, we are hearing more and more about AI. That includes financial services companies. If we look at the earnings calls the last several years, the most talked about now is mostly artificial intelligence. Banks are talking about this. TD Bank is expanding into healthcare with AI. JP Morgan is talking about how much they saved billions of dollars in fraud losses. Bank of America is their AI agent is approaching 1 billion interactions. And BNP Paribas is again doubling down on AI as well as ESG. So we hear more fintech. Again, fintech is not a new concept as well. It goes back to maybe credit cards, ATM machines, right? These are disruption in finance. But more recently, the fintech is all around artificial intelligence. But we can talk more. There are the economic value of AI is incredible. It's huge. There are a lot of studies that have been done even prior to this ChatGPT hype, potential to have a global impact, trillions of dollars savings, specifically between China and United States or North America. A more recent study by PricewaterhouseCoopers shows that the potential of AI economic value in China can approach $7 trillion. In US, it is close to $4 trillion, mostly coming from the labor productivity. So this is why no wonder companies, including specifically financial institutions, are jumping into this topic, because it has a huge potential to improve productivity. Most of the gains are going to come around this. But how important, and especially today, again, I'm jumping from topic to topic, but it's an interesting day with the Silicon Valley Bank being taken over by FDIC, their assets, which is very interesting. A lot of concerns around there, which has a direct impact on AI as well, because this particular bank has the backbone almost in the Silicon Valley for venture capitals or all these new startups. And in the AI world, the most dominant talk or hype is around these startups. So what's going to happen to these startups? I guess we're going to wait and see.
Fantastic. So we're with Bora Ozkan of Temple. So let's talk about what's happening with Silicon Valley Bank. We're seeing another situation where the federal government, you mentioned this, is getting involved with another bank that has failed. What are your thoughts on this?
Well, I mean, this is a little bit concerning. It is not, it is in a way unexpected, but also not unexpected. It is a direct impact of the increase of Federal Reserve's rate increases, right? Those banks, the question is, obviously Silicon Valley Bank struggled with renewing their finances as their liabilities expired, and they had to borrow with a higher rates. Their cost of borrowing increased dramatically. So that's not just the subject for SVB. The question now is, how healthy are the other financial institutions in the country, which is why we see a big, very, very active today in the markets, especially around financial services, financial banks. So the impact, again, we're going to have to wait and see. There are some similarities with what happened in the last week or so, running up to SVP, and finding similarities with Lehman Brothers in 2008. So it can be scary not to talk about that, of course. But in another way, the situation is completely different. So this is a lot more about the rates, the impact on the real world, and especially financial services. And again, we're going to talk a lot more about this. And I think eventually we're going to hopefully talk about these digital dollar talks. And it will be interesting to talk about these tools Federal Reserve has and what kind of impact this digital dollar may have on these Federal Reserve tools.
Yeah, so what type of impact will it have? Let's talk about that.
Well, the central bank digital currency, for those who are not familiar with, is the idea that although, yes, our most of the money transaction in the global scale is digital, but the digital currency refers to more Bitcoin-like on a distributed ledger technology. Not like entirely Bitcoin, of course. It's not an open network type, but it's more closed network, invitation only maybe. But there are a lot of work being done, especially in China. China already rolled out their digital yuan. Their idea is they want to create a little bit more transparency, efficiency on especially cross-border transactions. But specifically to economic impact is, the idea is the government currency being able to be sent directly to consumers to their cell phones. United States is slightly behind this, but they are also, it is confirmed that Federal Reserve is testing the waters. They have a trial they're running on central bank digital currency. So the impact I see is this. Imagine we saw slightly during the coronavirus stimulus talks. There was a talk about in the Congress about a direct payment to consumers. What that means is it's skipping the intermediaries, banks, and money going directly from the treasury, from the government, into the people's wallets, digital wallets. That impact, again, I think is significant simply because the role of bank is exactly here. They are the institutions, the middlemen who collects those deposits and therefore uses those to lend that money to businesses and individuals. So what will happen is eventually, I mean, speculation, of course, I don't necessarily see these middle parties totally being eliminated, but it becomes a lot more variation in that, what kind of services they offer. Meaning, I see a lot of digital companies, maybe Facebook's, Google's, tapping into this and taking advantage of this money being directly sent to individuals. So there's a potential impact, and it may, on the plus side, and I think it may help the government to better control money supply. In a situation like we are having today, when we have an inflation problem, if the government has a digital currency, they may have better tools to control money supply, therefore control inflation. But the downside is exactly this: what's going to happen to this financial services? How are we going to prevent fraud? All these tools in these years, that digital currencies may be safe, but the digital wallets, how safe are they? So this is, I guess we're going to, again, have to wait and see the results of the initial test coming from China, Brazil, Sweden, and so many other countries working on this one. And one last note on this, that's one of the needs for the Federal Reserve to tap into this, is because with the work going around in China, as well as several other countries collaborating on this, has a direct threat to dollar's global dominance as a reserve currency. So obviously, the Federal Reserve of the United States does not want that. They want to be up to par and offer a solution or competing digital currency where the U.S. dollar dominates the global markets.
We're with Dr. Bora Ozkan, and we'll take a short break. And if you like what you're hearing, there is a lot of digital disruption, banks failing too just this week. If you're looking for a second opinion on your wealth, give us a call, 888-988-JOSH, and we will score the top 5 holdings in your portfolio from a standpoint of risk, fees, and taxation. So call us now, 888-988-JOSH, 888-988-JOSH. We would love to meet with you and give your portfolio a second opinion. And when we return, we'll talk more about the 85 million jobs that could be lost, as well as the 97 million new jobs that could be created according to the World Economic Forum. We'll also talk more about this digital disruption, Silicon Valley Bank failures, and more. We'll be back after these messages. And we're back. This is Josh Jelinski, the financial quarterback, with Dr. Bora Ozkan of Professor Oz of Twitter. You can follow him at Bora_Ozkan, Ozkan. We'll talk, get his opinion on Sam Bankman-Fried, the crypto scam. All this digital currency thing, I don't see the need for it. It just, to me, I mean, Bitcoin, I see the need. A programmatic type of currency that is sort of divorced from the fiat system. And I feel that people over time will opt out of the dollar or Fed manipulation or Fed coin or whatever you call it. I could certainly see I could see Bitcoin rise and fill a vacuum. I find that all of these other coins are kind of spammy, scammy, and from Sam Bankman-Fried to Fed coin to now these 2 Silicon Valley banks failing, I don't really see the need. Like it's like a problem. it's like a solution in search of a problem, meaning we now have Strike, the Bitcoin app that solves the same day settlement issues. We have banks or brokerage accounts are now going like T+2 settlement. Pretty soon it'll be same day settlement. You have Venmo, you have Zelle. Like, why do we need FedCoin? Like, it just doesn't. To me, it seems like a way for the government to spy on its citizenry, give social credit scores. It seems like a dystopian nightmare.
Well, it's all around. It's not just the currencies. Let me give you the scary part about this disruption, and I can try to talk a little bit about why crypto, why central bank digital currency. Just a quick, there's a patent out there for a wristband that tracks the movement of workers, and it can send a little nudge of shock to warn if they're off track. Well, granted, this is not being used, it's just a patent out there. I mean, this is just to show you how scary it is sometimes out there. So when we talk about all of these solutions,
what you're saying is exactly right. It's like the Bible. I remember in the 80s hearing about, the mark of the beast would be a chip that would be on your forehead or in your hand. And then now you hear, okay, Amazon's doing that. And it gets like, I don't want any chips in my hand.
Exactly. I mean, yes, we need a conversation about this, right? So the ethical conversation, where do we draw the line? And the more important is the data, which I'm going to tie it to this. So this is the age of data. And this is to our point that we're going to talk about the job landscape is all around data, which is why it is important, the importance of ethics and regulation and compliance and who owns the data, who are we going to let use our data, private data, how much government is going to intervene. But the question is, if there's no intervene, what are these new innovations? How much is going to impact this AI generating new videos and photographs and text on our behalf? I mean, it can easily, this generative AI can record videos, write music. So where does this end? So there are all these talks that we need to have a broader conversation around. But going back to your initial question about crypto, Bitcoin, well, full disclosure, I don't have an investment in crypto. I was never actually personally favored including Bitcoin, but I see the value in a sense that if we think about today's data or the importance of data, the digital world, that we can tie into this metaverse idea, everything is going digital. So what that means is a digital commodity makes sense. And I see crypto more as a digital commodity rather than a currency. It works similar to this. So why do we invest in gold? Well, I mean, you may not have in your portfolio, but sometimes it is necessary. So I see in the future, as this technology develops, definitely a need to some extent, including your portfolio potentially, in various forms and shapes, of course, because the way I see the importance specifically is the technology behind this, not the currency itself, but the blockchain or distributed ledger technology. There is the surprising or very interestingly, the starting point of blockchain or Bitcoin with Satoshi Nakamoto's paper is a total distrust to government or central authority, right? The whole starting point is we don't need these central figures to approve our transactions. But the way the closed networks or central bank digital currencies are going is exactly the opposite, putting the central authority or government in the middle of the picture. So I see a future for both of them. It does not. We can have it all. We can have a trusted party like government or banks that are controlling and overseeing this, as well as more distributed ledger, more democratized transactions
But
being done entirely in a distributed ledger world.
and that kind of and I'm just going to interject just ideas because you're getting me to think. So that makes sense for Bitcoin. Bitcoin was an invention that was needed, but I don't trust the other things. I mean, you have what, 68,000 miners on the Bitcoin network. You have people who are transacting every day. I could see, by the way, I think blockchain, I actually could see Bitcoin sort of bring innovation. So, like Mastodon, and you'll have like social media built on Bitcoin. You'll have like you have all these different things, and maybe you could make sense of that for the broader listening audience. That really doesn't even make sense how Bitcoin will transform their everyday life. I get Bitcoin. I get that the Fed wants a means to snuff cash out of our economy to maybe do direct payments to citizens or something like that. But it's like, why are people spending so much time on this solution that's not even necessary? And we're meeting with Dr. Ozkan of Temple University, talking about the SVB fallout. We're talking about everything. He's a professor at Temple University. We're now live on Clubhouse, taking your calls. If you have questions, if you have a question for the professor, we're talking with Dr. Oz, a different Dr. Oz of Temple, Professor Oz. So, Professor Oz, yeah, talk more about that.
Here is my take on this one. For banks and central banks, digital currencies, the biggest impact or the biggest positive take from this technology is where the banks spend almost most of their resources. Know your customer, right? Being able to track the transactions and prevent fraud and money laundering, there's a big positive side to this. This technology can create. So as far as the need or what kind of solutions, by the way, I totally agree with you. A solution chasing a problem, simply because whenever somebody is investing or saying they're investing in a blockchain technology or they're coming out with a blockchain solution, you have to question, because you have to first find out why blockchain. Blockchain is not a solution, it's not a technology for every type of problem. There's a specific use, there's a specific need, and you need to find a solution to solve that problem. You need to start with a problem and identify that problem needs a solution like blockchain and move forward with that. There's a lot of myth around here, but I see, I guess, more the last, especially a couple of years, it's calming down. What I think is the real value is coming out. To the Bitcoin, actually, Bitcoin is a big energy consumption. We don't need to get there, but you probably heard about the issue around the blockchain technology and Bitcoin, specifically the energy consumption it does. Actually, Ethereum moved into last November, Ethereum 2.0 significantly reduced the energy consumption over 99% that it was the initial Ethereum use. It's a different approval mechanism that definitely reduces that mining or changes how mining is done. So therefore, there's definitely a positive side. And the technology itself has a lot of use cases potentially. Think about real estate, land titles. One of the biggest things we spend time these days is that title insurance, because we cannot track. But if we have a technology solution like this, we would not need actually the title insurance. It can be automatically approved. This smart contract idea, where this is, let me correct this, what I say when we say smart contract, we're talking about this digital solution, which is almost like a switch. When a condition is met, whatever they agreed upon is going to happen. We see this a lot in maybe identity records, potentially in voting, identity fraud. We can prevent, it can help. Insurance claims and payouts, clearinghouses, fractional investing in drug supply. It's a huge potential. cross-border peer-to-peer payments, insurance claims, and blockchain as a service. There are some of the use cases, not to mention NFTs. So we can pivot to that whenever you want,
Yeah,
because I
so
can
let's talk
totally
about
hear
the
you.
Silicon Valley Bank fallout. We're with Dr. Bora Ozkan of Temple. So let's talk about Silicon Valley Bank failure. Do you think this will be like the Lehman of today?
Well, there are talks about it. I guess today's fear in the stock market was exactly that point, was that are we having another 2008 financial crisis or the start of that one? Um, but I see a lot of differences. I cannot comfortably say, or I can't tell I'm that concerned as the fallout in 2008, simply because there was a bubble around that. So this has been in the works. The fallout for Silicon Valley Bank is directly tied to the Federal Reserve rate increases, which has been in the works for some time. And there are a lot of talks that Federal Reserve is actually going to speed up increasing as we see the economy is not cooling down. So that is a potential direct impact, not like 2008, but we definitely have to have a conversation or more probability of a harder landing than what we thought last week. So there were a lot of talks about soft landing in 2023. With this fallout, maybe it is the more of a harder landing than a softer one.
So AI is a trending topic on many people's minds right now, and it's still very early in this new tech's applications. As an expert in artificial intelligence, what do you feel are the pros and cons for us to be aware of?
So the pros are definitely the productivity gains. So we can talk. I mean, clearly there's an investment, especially a year like 2022 and going into 2023, where deals, mergers and acquisitions are declining, investments are on hold. But with the exception of artificial intelligence, there are some interesting with the jobs. Let's tie it slightly into this. There was an interesting anecdote I think didn't wasn't talked as much. ChatGPT is a big hype. I think there's a more hype than the reality. It is definitely not as scary as I think it is, but I think we have to learn to live with it. They are going to have a lot of positive impacts on our Google searches. Surprisingly, this ChatGPT is helping Microsoft to better compete with Google search. So I don't know if you ever tried the Bing search with ChatGPT, but it is improving. As we use our Google search in our daily lives. I'm sure we all felt that frustration when you see 10,000 pages of your search. Well, it is better now. So let's give us some solutions instead of giving us 10,000 pages. So it is definitely going to improve. The productivity is going to improve. But the interesting part is about the jobs. The day Microsoft announced that they will invest $10 billion into OpenAI, the company behind ChatGPT, they also announced that they will lay off 10,000 people. An interesting number match on the same day, which I felt it was interesting. This is where we are headed with the economy cooling off, with the data, with this artificial intelligence. The job descriptions are changing. The job landscape is changing. According to a recent study by World Economic Forum, by 2025, there will be 85 million jobs lost, like a decreasing demand jobs like data entry clerks, administrative jobs, bookkeeping jobs, the factory workers, more repetitive jobs. The idea over here is the record keeping, the people who are manually entering or doing more manual jobs are declining. But it is expected to have a growing demand and then 97 million jobs being generated. And the most demanded jobs are data analysts and scientists, AI and machine learning specialists, big data specialists, digital marketing and strategy specialists, process automation specialists, and digital transformation. All these jobs are around this digital, the idea that how we are going to work with this large, immense amount of data that is going to make us efficient, but it's going to remove a lot of jobs. The problem here is, how are we going to take this? How are we going to train the new generation to meet these jobs? How are we going to retrain those people who are going to lose their jobs, who are going to lose their daily repetitive jobs? Clearly, it is going to, for the investment purposes, it is good, right? Because it is going to make the companies more efficient, more attractive in investment tools, because they can reduce their costs, they can increase their efficiencies, therefore they are leaner and more investment worthy. But how about the people? How are we going to allocate this? And what's going to happen to these jobs? This is the story that is going back to what happened in the Midwest, right? With the global economy, as we talk, I'm sure there was a lot of talk. I mean, the positive, the impact, overall net impact is positive, but it disrupts a lot of neighborhoods. So the question that we need to ask and that we need to be prepared is, how are we going to address these problems? How are we going to train them? So the job as a university, like public university, like Temple University, is definitely have a role in this one. So we have to immediately change our curriculum, which we have been doing. And if you look around the country, one of the good things about our universities are we are resilient. We are immediately changing courses. We are offering data analytics courses. We recommend, to my students, I recommend in finance jobs, no matter what you do, learn programming, at least learn how to understand programming. To help with the chat GPT, actually, you don't need to know coding. They can do it for you. But what important is, you need to be able to track the mistakes in here. You need to be able to read the output. So that's the main thing we need to do. Again, this is for how are we going to train the high school to college.
No, so we'll take a short break.
Retrain?
Dr. Bora Ozkan, we're taking your questions on Clubhouse, Spotify, YouTube. We have a question next. Don't you think there is a need for a strong company to destroy the monopoly of Google and Meta? How are these digital disruptions going to do that? We also will take a short break. If you could, there was some type of buzzing sound. If we could get that resolved, I don't know if we can pause for a brief break and get that buzzing sound resolved. If anybody has a question, Dr. Bora Ozkan is an expert in fintech, AI, and other things to consider that we'll talk about. This is Josh Jelinski, the financial quarterback. Don't touch that dial. Of Temple. So you're talking about fintech, AI. So Silicon Valley Bank fails. What do you think? Do you think it will disrupt the economy as we know it?
I think I don't necessarily see a big disruption. I may be wrong, but the way I read it is definitely going to change the talks around what kind of impact these changes or the increase in the Federal Reserve hikes, what kind of impact is going to have on the financial services. So far, it has been contained, but it looks like maybe we're coming to a stage where it can get out of control a lot easily. The question is, we need to see the results of those stress testing that has been done more recently? How are the other financial institutions getting prepared for this harder lending than we thought in the past? So I'm not that pessimistic,
Well, give us
honestly.
some data. So the Fox School of Business at Temple, you're not that pessimistic. So you're thinking we'll be okay with this.
Um, I put it this way: I don't think we will be as bad as some people thought. But I mean, it is going to impact for sure because it's double-edged sword, right? I mean, we have to definitely contain this the global phenomenon around inflation. This generation may not be familiar with this, the dangers around inflation, and but that we need to find a solution. But Federal Reserve has dual mandate. It's not a single mandate. They don't have to just control the prices. They also have to stabilize the
Yeah, but
economy
what
and to
about?
achieve.
Here's the problem, though. So people worried about the Wall Street excesses of '06 to '08, the bank failures. Banks cleaned up their balance sheet. They're not lending out as much. They have tighter reserves. You have all these Basel requirements. The banking system is stronger than ever. The Wells Fargo's, the bank, all of the redheaded stepchilds that everybody hates in the banking industry, they're actually not the problem. The problem I see that could create another Lehman, could create another '08 crisis, is the what are the Silicon Valley firms like that show Uber, the Apple TV show on Uber. I don't know if you saw that, or on all these these venture capital firms creating these pets.coms companies and Lyft and Uber. I mean, and they're more successful businesses, but you have Instacart and you have, and there'll be ones that will survive. I'm sure Instacart will survive. I'm sure Uber and Lyft will survive. But for every Uber and Lyft, you're going to have like 100 other of these Silicon Valley companies that basically got a 1 to 100 leverage. Where is that money going to go? And that's where I think you could see a wave of these Silicon Valley banks. And then you have the Bernie Sanders who are going to say, oh, Wall Street failure. This isn't Wall Street. This is Silicon Valley. This is all of the people that kind of played with funny money. Has very little to do with traditional banking. So I think the banks are safe. I think the bigger problem is all of these kind of pets.com companies.
Well, the banks are safer for sure. This is actual Silicon Valley Bank is a typical example of liquidity. So not many banks, majority of the banks cannot survive a panic mode like that. So this is what happened. Thankfully, this was specific to Silicon Valley Bank, specific to the Bay Area, which I'm not saying thankfully in the sense that it is. Of course, there are dire consequences, but it's not in not that broad sense. It is just because of the nature of how venture capitals and all that money is parked in that region around Silicon Valley Bank. I don't necessarily expect that to spill over.
How
The
many
overall
other
banking
banks are
industry.
there in Silicon Valley that give money to these companies? I'm going to give you a list of the most valuable startups in the world 2023. A lot of these are Chinese, which is crazy. ByteDance, $140 billion value, company out of China. SpaceX, $127 billion valuation. I don't think there'll be a problem there. Shine, also Chinese, e-commerce. Stripe, $95 billion valuation. Checkout.com, Canva, Instacart, Databricks out of San Francisco. Revolut, FTX was up there at the start. Epic Games, Fanatics, Chime, Byju's out of India, J&T Express out of Indonesia, Zhaohongshu e-commerce out of China, Miro. See, the problem is there's a bigger problem that I've studied for years. We had this guy, I don't know, on the show, I don't know, a while ago. He's a friend of mine, Barry Dyke. And he said, what we don't know is all of the mutual fund companies in the world, they would put 1% to these private firms. So you don't see that on their balance sheet. You see they invest 3% in Apple, 3%. But all of these GoPuff, Yuan Fudao, Miro, Ripple, Discord, DJI Innovations, Blockchain, Plaid. But what's going to happen when all these billion-dollar unicorn companies go belly up? Because I guarantee you 90% of these companies are gone in a few years.
It will be, but it's the model private equity or all those venture capitals are running around, right? So there will be winners and there will definitely be losers, a lot of losers. But the winners are so large with small investments getting into this. And again, I see in 2023, more going into 2024, more AI. So in the AI space, right now, it may have changed in the last few weeks, but I've seen 6 companies reaching the unicorn status in this generative AI alone. OpenAI being the largest one, over $20 billion valuation, but 5 other reached to over billion, and there are definitely 5 more trying to catch up and going over. So it looks like the trend is going more towards generative AI, but that the scare part or the concern, my concern over there is that creating a little bit of bubble in that arena, because there are so many examples of the failures around this technology, but there are a lot of the potential as well. So
I know you do this for a living at Temple University. We're with Dr. Bora Ozkan. You're a research expert in all things AI, business, and fintech. I mean, I don't know about you, but I feel like the more AI, the more dumber people are getting. Like, it's just, I would just like people to be more intelligent. I don't see how a robot is going to replace common sense. It's like, it's a cool gizmo and gadget. For example, Excel, Microsoft Excel. Now they do a lot of automated things. We used to have to be an Excel whiz. Now you can do all the VLOOKUPs without having to be an Excel whiz. That's how I see this technology helping. I still don't see how it replaces humanity. I mean, I know that's what everybody says, but
again, I do not think it is going to replace the jobs. It is not going to, these innovations are not going to replace banks. There will always be a need for financial institutions. These jobs, these technologies, those robo-advisors are not going to remove or eliminate advisory jobs. There will always be financial advisors. But what's going to happen is these innovations, these technologies are going to make us more efficient. I don't know about you. I mean, I'm more quant person, but I would definitely, with the new generative AI, when I'm doing a research, if I'm going to organic analyzing a data for any purposes, I love that I don't have to spend hours and hours on writing a code. I can get a help and I see the results. To me, the more value added is when I look at this outcome and analyze it and come to a conclusion. This is what the part that is very important. Again, these innovations are going to change the way we do business, but they're not going to eliminate it. But that's going back to our earlier conversation. It is definitely going to eliminate several jobs. So also to your comment about these innovations are making us more dumb. Well, yes, there is a valid concern around here. But then it comes to the education. So we need to now then train people on this emotional intelligence, this common sense, right? And this is the conversation is going to come around. How can we do? So yes, we need to train all these new innovations, technical skills. But as universities are not only there, they're not technical skills. They're not for technical skills mainly. The university's main job moving forward as well to improve those soft skills or teach these students or these learners, which again, when we say students, it is going to be a lifelong learning. So like it or not, I see that a lot more people are going to come back every so often to get retrained on these new innovations or new solutions or the new job landscape. So we need to get retrained. That includes both hard skills like technical skills as well as soft skills.
Yeah, wonderful. Well, we'll take a short break and we'll be back with questions from the audience. If you have a question for Dr. Ozkan, somebody says, I wonder what's going to happen to some of the fintech startups. But I'm telling you, Dr. Ozkan, I think I am sick of calling on the phone and getting a message tree of an AI. I want to speak to a live person. I don't believe in robo advisors. Now maybe I'm like a dinosaur, but it's like I just see that when people, even the market crash we had in 2020 and 2022, I saw the fact that there were all these robo advisors going into indexing, right? Creating distortions in the economy by so many people going into index funds that now we're seeing increased volatility because all of these computers are buying and selling indiscriminately, but just because we hit a 200-day moving average or something. It's just, to me, I totally agree that it will happen. I'm just saying it's maybe not a good thing. And I've not seen anywhere in my life, like even I have a Tesla, right? I have more problems with my damn Tesla than I've ever heard of. And I hate Tesla. And when I'm done with my Tesla, I'm going to go back to a regular gas combustion engine because I want old school. And I'm going to do less high tech because it's like, it's $7,000 when you have a problem instead of that. It's just, and then they throttle your speed. Then they, the intelligence that it's not exactly AI and it's not mature yet, but to me, it's caused, more accidents than most people. I know they say, oh, well, it's so safe and all this stuff, but I find there to be very times where I've been worried for my life because I've driven and I'm on autopilot and, the sensor doesn't see a median and I have to take over. It's craziness. So we'll be back with more questions for Dr. Ozkan when we return. This is Josh Jelinski, the financial quarterback. Don't touch that dial. And we're back with Dr. Bora Ozkan. And Dr. Ozkan, yeah, so what do you say to all this? I know I sound like a fuddy-duddy. I'm actually a young guy, but it's just like, to me, this is BS. When I hear crypto, AI, I think Bitcoin, great. Bitcoin makes sense to me. Digital gold, programmatic, fixed supply. I get why I want Bitcoin. I don't get why I want Ethereum 2.0 because then they're going to come out with Solana. Then they're going to have Cardano. Then there's going to be a Fed coin. And it's like, to me, all of these innovations are like people in Silicon Valley thinking of ways to get rich. Then they raise money. Then they exit. It's like 99% of these businesses are scams. I mean, if I look at what's actually helped my life, maybe Instacart is the only one that I like. So go ahead.
But there's more, right? So the data is gold. So we are in an age of data. We, especially after the pandemic, we are more stuck on our computers, on our cell phones. Data is being created, generated on everything we do. With we do more and more work from home, as you spend more time on work-related as well as your social life on the internet, you leave digital marks over there. So there's a lot more. We are generating more and more data. So that's why I understand your point, and I agree to a lot of extent to what you say, but we have to go digital in a lot of senses to be more efficient, more effective, and get better results and solutions. Both our individual lives as well as for companies.
No, I'm all for innovation, but I think this recession that people think we have is not a real recession. I think all of these big corporations were data mining for the last 2 to 3 years, and you know what they realized? We don't need all these people.
All there, all right. I mean, They invested so heavily, and they thought that as if there was no ending to hiring. So that's why you hear all these layoffs in tech industry, tens of thousands of people being laid off. But when you look at the real world market data, the unemployment is still not high. So we don't see that in the real world. But there is a spillover effect. So whatever is happening in that world is going to eventually spill over and impact what we do. Let's go a little bit into what you mentioned about the NFTs or Ethereum 2.0, why it makes a difference. Here's what I also see as an investment tool. Again, not making any investment advice, but it's not new that art is a form of investment. People invest in these tools, right? Why would you buy a Picasso? Why would you spend millions of dollars in a painting like that? Because you think, well, a couple of things, right? You think it is going to gain value. You buy it and you're hoping to sell it at a higher price. There's definitely the bragging rights. So this new investment tool, those NFTs, can provide to some extent similar investment strategy for in a digital world. If I think about this, this is the example I give in my class. Imagine in the near future we have a metaversity or meta office. So you have a digital space where people stop by and listen to this podcast or listening to us or watch us by stopping by. So when we create this environment in it that has a lot of services that we can offer digitally in this environment. And imagine, as far bragging rights, imagine I have a very cool this 2023 model and the Warhol type artwork that is digital, and that's only I have that copy, or I have one of 10 copies that is located in our Meta office, right? So I have the bragging rights. I have a lot more people now crossing by and seeing that I have this cool artwork. And also, I think I'm going to be able to sell it at a higher price because I am the only one, but the supply is very limited. So I see more potential. Again, there's a lot of hype. The reality is always somewhere in between. But in the foreseeable future, as we see more and more advancements or investments into this metaverse, because of the fact that we are more relying on internet, we are more relying on our digital world, we need to find better solutions that we can network, socialize, and interact with in a digital world.
Yeah, but if I
Because
think of NFTs, survey by Twitter showed that 64.3% of investors buy NFTs to make money. And it revealed that most investors lost money on NFTs in 2022. I imagine it's even worse in 2023. So it's, the reason people bought it was to make money, 64.3%, according to some unofficial survey by Dexter Lab. 14.7% bought it as a flex in the community, which I could see that.
But I think the issue
12.4%.
over here is the investment in general is being done and uninformed investors getting into this investment by speculation. So you don't necessarily see people going around and buying gold on the market. Individual investors, you don't see people, students, high school students going in and spending their money on buying gold or other commodities, right? Copper or, because those markets to some extent, especially derivatives market, are regulated, are for informed investors. And I think this is getting into this area. There's a lot of speculation. I don't necessarily think that means they're worthless. They are not going to mean anything. But I think the valuation on a lot of those tools are based purely on speculation. Therefore, a lot of investors lose money because they are uninformed investors. So again, I can't make investment advice, but I always tell whoever asks me, well, try to make informed decision. Definitely don't make a lot of investment. Diversify your portfolio, not put all of your eggs in. It's the old rule always works in the digital
I'm not
economy.
disagreeing with you that this is the future. I just am one of these that it's like people have just lost a lot of money. It's like the dot-com bubble. Will we have Amazons? Will there be winners from this, that will thrive and revolutionize society? Sure, but it's like it's very similar, the period of time we're in, to 2000 to 2002, when people woke up from the 90s, and there will be an innovator, maybe somebody in the chat GPT space will be able to rival Google. Like, ByteDance, for example, has the technology that can take Google on. But, I don't think that's a good invasion, because you have a Chinese company outplacing U.S. company. And now the communist Chinese are now data mining us. So with TikTok and ByteDance search, I have a friend who's a top Google ad executive. So that's how he makes his money. And he says the only company that could compete with Google is ByteDance, just in terms of the sheer scope of what they do for advertisers, meaning he can just make money for his clients. He does Google ads for lawyers all across America. And that's his, bread and butter. And he said, you know what? There's Google, and that's all he doesn't spend money on Facebook. He just spends money on Google. And then he's seeing ByteDance. So I want to thank you, Dr. Bora Ozkan, for joining us. Anything you'd like to plug, or a website that our listeners can watch or viewers can find out more of your work?
Well, they can follow me on Twitter, again, at Bora_Ozkan, Ozkan, or they can find me on LinkedIn. I think I'm more active on LinkedIn.
Wonderful. Thank you so much. We're talking bank failure fallout with Dr. Bora Ozkan, AI, and all these other cool stuff. Next, we're going to go to a fascinating interview with Dr. Richard Smith. So stay on, and thank you so much, Dr. Ozkan, for joining us.
Thanks for the invite.
Okay, up next, we're on Clubhouse, Spotify, iHeart, YouTube right now live. We're also live on Clubhouse. We will be taking your questions on YouTube and Clubhouse. So if you have a question,